will be able to solve. So please come to next paragraph, factoring. What is factoring? What is factoring? Any idea? Probably no idea. It's a new concept for you. Of course, for a businessman, it is not a new concept. Factoring means outsourcing of receivable. Factoring means outsourcing of receivable management. What is the meaning of outsourcing of receivable management? First of all, do you know the meaning of outsourcing? That work which you can do, you can give it to others who is a specialized entity. Is it right? So now in a business, you normally manage your own debtors. You normally manage your own debtors. Normally, this is what you will see around you. But dear student, now there are specialized agencies called factor. Called factor. And the service is called factoring. Teacher, teaching. Okay, factor, factoring. Doctor, doctoring. So, a factor is a specialized entity who provides you all services relating to receivable management. Instead of you managing your own receivable, you can hand over the task to an outside agency called factor. In a business, one of the areas where you have to put lot of time and effort, lot of time and effort is which area? Receivable management. There are thousands of customers in a business. As the size of the organization grows up, one area which becomes heavier, voluminous is receivable management. Is it right? So if a coaching institute gives credit to the student, see what will be the problem. There are thousands of students. Recovering from them will become a big task. Is it right? And in some institutes, towards Delhi side, there are lakhs of students in one organization. Do you know that? You don't know. In which world are you living? They have 6 buildings. Each building is of 8 to 10 floors. Okay. And continuously, IIT, GE, I don't know what they call, medical, civils, coaching goes on. Okay. There are 200 hostels around that campus. So a full-fledged industry. Just imagine if they give credit to the student. Then they will have to hire how many people to recover money? Is it right? And if they do it on their own, they will have to put a lot of people. In business, they have to do. In business, they have to hire people who does recovery work. Instead of you doing all this, hand over the receivable management to a third party. Of course, he will charge you. What he will charge you? Fees, commission, interest. Okay. So in the coming future, this will become a important business model. Okay, people can specialize in this kind of activity. Just like nowadays we have account writing work is outsourced. Do you know that? Many companies, they don't hire accountants to do the accounting work. They outsource it. At the end of the month, what they do? They will send all the data to a third party, usually chartered accountants or specialized companies who only do account writing. Okay? So you will send your bank statement, your daily receipt book or purchase vouchers. They will compile it in the form of a file, give it to that party, and he will do the account writing work. So you don't have to appoint a accountant and pay him salary, bonus, PF, and then you have to keep some space for him. Okay, at least 30-40 square foot area you have to reserve for him so that he can do his work. Give him computer, software. Instead of that, you can just give some small amount to an outside agency and he can do it at almost half the cost you will incur. Why? Because he already has a set of people to do that kind of work. Okay. Same thing can be done for receivable management also. Why you are chasing customer? You can hire an agency, give them a list of debtor, amount due, due date, and then it is up to him to recover the money for you. And if he recovers, he gets commission, right? Not only that, factors can provide other services also. Like he can also prepare invoices and dispatch the invoices. Prepare and dispatch the invoices, because that also is a task. Once you dispatch the goods, just send him a delivery challan, then he will prepare invoice, write GST, write address, courier it. Okay, that can also be done. Then the factor can also do the account writing work relating to receivable. So your entire receivable ledger, debtors ledger, or what is called sales ledger, can be maintained by the factor. You don't have to do accounting work also, because one of the areas where we have maximum accounting task is receivable. Debtor and creditors are the two areas where we have maximum account writing work. Every day hundreds of customer buy goods, sales return, payment received, discount, etc., bad debt, reconciliation. Who will do all this work? Factor. Okay. So factoring is not just a single service. Those who think factoring means wasuli wala person, no, it's a professional service. Even reputed companies provide such services. It is rather a portfolio of complementary financial services available to the client. So it is basically, factoring means providing services relating to receivable management. Then the institute will ask you a question. Name 5 services provided by a factor. So what will you write? Credit investigation. Credit investigation means, suppose a new customer approaches you and says, I want credit. What will you do? Yes. What will you say? Yes or no? You will say, wait a minute. We need to ascertain your credit worthiness. And for that, what you will do? You will start doing all the investigation work, or you will appoint an agency. If you do on your own, then you don't have so much time. Every day 100 customers comes to you like that. But you don't have so many employees to do that work for you. So you will nowadays, what you do, you get that work done from an outside party. Factor provides that service also. Then factor will do all sales ledger accounting. So right from debiting the customer, crediting for amount received, sales return, GST return, whatever GST adjustments are required, cash discount, bad debt, all accounting will be done by the factor. Some factors also take the responsibility of invoicing the customer on your behalf. You just give him the dispatch detail, 500 units have been supplied. Then he will prepare the invoice. Purchase of receivable. Sir, what is purchase of receivable? He will say, see, you have a debtor of 1 crore rupees. You don't bother about their collection. Okay. Transfer the debtors to us. Means transfer the right to collect the amount to us, and we'll pay you 95 lakh rupees. So for 95 lakh rupees, he will purchase your debtor for whose book value is 1 crore. 5 crore 5 lakh he'll pay less. Why? You can either call it as a discount charges or commission or interest, because he will take some time to recover that money. He is making you payment now. Okay, so therefore he will pay you less. Because, and as a company, I am also happy. My money has been collected. So my further bad debt problem is resolved. My loss of opportunity of funds blocked in data is reduced. My headache and tension and effort of collection is eliminated. So we'll sell our receivable at a discount. Okay. So how much discount, etc., depends on a lot of factors like risk involved, time period involved, okay, efforts involved. Some factors say, okay, will not purchase the receivable, rather will give you advance against your invoice, will give you advance against your invoice. So same example can be used here. You have issued a sales invoice to a debtor 1 crore. Debtor will pay you after 1 month. So your money is blocked. So what the factor will do? Factor will say, don't worry, calm down, calm down. I'll give you 95 lakh rupees advance. After 1 month, we'll collect 1 crore rupees and we'll deduct 95 lakh plus interest on 95 lakh and hand over you the balance amount to you. Happy? Yes. Some factors can also take the responsibility of bad debt risk. He says any bad debt risk, if it happens, we will bear that bad debt risk. Don't worry. But then they charge high commission for that. They will charge you high commission. So without bad debt risk, if he charges you 2% commission for collecting receivable, with bad debt risk, he may charge you 5%. Because if customers don't pay, he will have to bear the bad debt risk. Normally, factor provide this service for which they are more popular, collection and monitoring of debts. You don't have to go to customer's office now. Who will go? Factor will go. Right. So if they ask you what are the services provided by the factor, these 7 services you can note down. And then they can also ask you write a note on how the factoring works. That is called mechanics of factoring, means how the entire factoring system operate. So see this diagram and the explanation is printed below. So I will explain with the help of the diagram. Are you ready? Say yes. So you will find there are 8 steps here. How many steps? Which is the first step? This one on the left side. Extension of factoring documentation. Then you will ask, what do you mean by extension of factoring documentation? So just write down agreement. Agreement between the company who is selling goods and service and the factor. Okay. Suppose this is a company, let us say Reliance, and it has got more than 1,000 customers all over the country. So they don't have time, energy, efforts to recover money. So they will appoint a factor. So let us call it as a SBI factoring services. There is a company SBI Factoring Services Limited. So they will enter into an agreement with this factor. Why agreement? Because a lot of money is involved. Huge stakes are involved. So whenever there are financial matters involved, it is better to write an agreement so that in future if any dispute arises, we have an agreement to refer to. So what will you write in that agreement? Agreement will contain main items like this. What are the services the factor is going to provide? Because there is a long list of services. I may not need all the services. I may only need collection service. I may only need collection plus advance. I may need collection plus advance plus bad debt. collection plus advance plus bad debt plus invoicing. Accordingly, he will bill also. Plus how much fees he will charge or commission he will charge. In case if he is giving us advance, what is the interest rate is going to charge? Is it right? Then what you do after that, once your agreement is signed, then this customer of yours, customer of Reliance, any customer, is it right, will give an order to this company, will give an order, place an order. So that is an usual business practice. First you issue an order, then goods are delivered. And then what Reliance will do, it will deliver goods to the customer with the invoice. But now that invoice will have a stamp. This is the invoice. If there is a factoring arrangement, they will put a stamp here. Okay, stamp. Please make payment to. Please make payment to whom? SBI Factoring Services Limited. Because otherwise customer will not make payment to SBI. SBI Factoring goes to collect money from customer. Customer says, who are you? Why should I pay you? So therefore Reliance has to inform the customer that you will have to make payment to SBI Factoring Services Limited. Right. So that customer is aware that for this bill, I have to hand over the check to SBI Factoring Services. So that was step number 3. After that, step number 4 is a copy of invoice is sent by the seller to the factor. The reason is simple. Factor should know how much he has to collect, from whom he has to collect, when he has to collect. Is it right? Otherwise, how he will approach the customer? So therefore, a copy of invoice is sent to the factor, which will give him detail about the name of customer, address, and the amount to be collected, the due date on which it has to be collected. Then comes 5th point. 5th point may or may not be there in every factoring arrangement. 5th point is factor pays advance. Factor pays, but again, if suppose the advance is not there in the arrangement, step number 5 will not come. But most of the time, there is an advance payment arrangement. Factor pays you advance against the invoice, but he will not pay you 100 rupees advance if the invoice is of 100 rupees. How much advance he will pay you? Less than 100, because he has to recover from you commission, fees, interest, and there is a possibility of bad debt, sales return, discount, etc. also. Is it right? So therefore, as per the terms and condition, he will give you advance, which can be approximately around 80%. As an example, I have written 80. This 80 is an example. In some arrangement, they will pay 85, 90 or 75, etc. In a numerical question, this will be provided to you. What is the advance factor will provide to the customer? And then the factor will start follow-up. Come to the right side. Step number 6. Factor's task starts now. Follow up with the customer. He will send email, SMS, personal follow-up, and then on the due date he will recover the payment. Is it right? So this company can just focus on its work. They don't have to follow up with the customer now. Who will do the follow-up? The factor. Factor will collect money, and step number 8, pay the balance amount. What do you mean by balance amount? Suppose the invoice is 100 rupees. Already advance given to you 80. 20 left minus interest on advance, say 3 rupees. 17 minus fees for collection, 5 rupees. So what is the balance handed over to the company? 12 rupees, which means he will deduct interest if he has given advance. He will deduct commission or fees for collection work. Balance amount is handed over to company. So this is one cycle. Okay. So in the exam, this theory question is asked many times, that what is factoring, explain how factoring arrangement works. So this I have explained it to you. Now dear student, kindly come to advantages of factoring on the next page. Advantages of factoring. So when you're writing a note on factoring, you have to also write advantages of factoring. So first advantage is, you have seen in the diagram, it converts your receivable into cash without botheration of repayment. Sell goods, give invoice to the factor. Factor will give you advance. Easy. And now it is a factor's headache to recover the money from the customer. Company can focus on its work. Similarly, because of point 1, point 2, definite pattern of cash flow. You know, if I sell 100 rupees, factor will give me 80% of the advance. Is it right? So when you will plan for your cash flow, it is easy to plan for your cash flow. You know exactly when cash inflow will take place. Planning for cash flow becomes easier. Like in cash budget, we have done lot of calculation. Customer will pay after 1 month, 2 months. Practically that doesn't happen. You are budgeting that he will pay after 1 month. He may pay after 3 months. All your cash budget goes for a toss. Right. But if there is a factor, you are sure that you will receive the payment as per the given timetable by the factor. Factor gives you a timetable that we are definitely going to receive the money up to this date. In business, planning of cash flow is very important for survival and growth. Planning of cash flow is important for survival. First survive, then grow. Some companies don't require a credit and collection department if they hire factor. Okay. So this area is used by collection department. 4 employees sit there. They need computer, electricity, AC, and everyday tea, biscuit, snacks, salary, bonus, PF. Remove all of them. Okay. And just make payment to the factoring company. So you can save lot of cost by having a factor. And point number 4 is because of point number 3. BCom type answer. Same thing repeated again. Saving in collection and administration cost. You don't need a separate department for this. Who will do all this work? The factor. Point number 5, which is one of the main reasons for appointing a factor. Management can focus on its core activity, means planning, business development, innovation. Okay, planning, production, business development, innovation, strategic decisions. These are the core activities, not chasing the customer. Okay, customer is watching a movie, you happen to sit next to him. Okay, he is watching a movie and you ask him, when will you make the payment? Then he goes to the toilet. Okay, he's standing, you go and stand next to him. When will you make the payment? Okay. Then he comes out of the toilet, he goes to canteen or wherever the chips is sold. He's buying a chips, you stand behind him. When is you making payment? Do this work. Okay. After that, that customer will never come to you only. Let this work be done by a factor. Is it right? They will go to the customer's premise on the appointed day, appointed time, sit there, talk to him properly. You should not waste your time on non-core activity when you are doing a business. Is it right? So collection is a non-core activity. Of course, it is important, but it can be outsourced, and in the given time you can focus on other important activities. Because you have a factor who is a specialized agency in recovering money, your bad debt is also reduced. And many times the factor also provides you advisory services. Why? Because he is a specialized company. He knows how to attract customer, how to improve your sales, okay, what kind of product you should sell, etc. Because he has got experience with many companies. So using the experience of some other company, he can give you certain advices. So these are the benefits of factoring. Then they will also ask you, what are the disadvantages of factoring? So you will say, cost of factoring is high. Cost of factoring is because if you borrow from a bank, usually you will borrow at say 10%. If you borrow from a bank at 10%, the interest factor would charge you will be 24%. If you borrow from the bank at 12%, factor may charge you 30%. Their interest rates are very high, but he gives you advance. That is one advantage. Second, factoring of debt may be perceived as a sign of financial weakness. If you are appointing a factor, what outsiders may think, this company has a financial problem. This company's debts are turning out to be bad, and therefore they have gone to the extent of hiring a factor to recover the money. It is into financial problem. So that can give a wrong signal to the market about you. Is it right? And then next is business secrecy may be diluted. True or false? So why in India many companies don't appoint factor? One, cost is high, and third, confidence. Confidentiality issue is there. Because if you are a third party, a factor, and if I give my invoice to you every day, will you not have complete information about our business? How much sales we are making? Who are our customers? What do they buy? When do they pay? And then this data, this information about the customer, who is the source of revenue, can be leaked to other competitors. Is it right? And then the other competitors will approach your customer, give a better offer. So that risk is there. And if the factor is himself a smart person, he will start his own business. He already has a list of all your customers. Over a period of time, he will know each and every customers of your personally. Is it right? It is similar to what article students do nowadays. He'll work in an office for 3 years, become friend with all the clients of the boss, and after he becomes a CA, he will approach all those clients. Okay, it happens. You will also do it, although unethical. And then he will say, see, if you get the work done through my boss, he will charge you 5,000 rupees. And ultimately, I only come to your office and I do everything. My boss only signs. Now I will only come, but I will only sign, and I'll charge you 3,000 rupees. Customer also thinks, yes, ultimately I need a signature. Work will be done by the same person, and he's also a CA now. So you'll also agree. Right? Cost cutting is a major issue in every organization. So as long as it does not affect your efficiency, you can go for that option. So therefore, in India, we are very much scared of diluting our business secrecy more specifically about our customers. Is it right? Because that is the source of income. And if you give information about customers only, then there is a big threat to your own organization. But anyway, both plus and minus are there of factoring arrangement. Another question for you is, what are the different types of factoring arrangement? So we'll discuss one by one. Recourse factoring, non-recourse factoring, maturity factoring, advance factoring, notified factoring, non-notified factoring. And now factoring has gone at international level also. If you have a customer in foreign country, there's always a problem how to recover money. In India, at least you will take a train or a bus and reach the customer's premise. But if he's in foreign country, he's in Uganda, Ethiopia, Sudan, Bhutan, Nagaland is in India, then China. You can appoint a international factor, okay, and they will help you to collect money. So first question, tick mark here. What is the difference between recourse and non-recourse factoring? What is the difference between recourse and non-recourse factoring? This word recourse comes in some legal topic also. Negotiable, I think. Negotiable instrument, recourse, holder with recourse, without recourse, something like that. Recourse factoring means the company continues to remain liable to the factor. If there is a bad debt, I'll go back to that diagram, not required. Remember that diagram, there is a company, there is a customer, there is a factor. If that customer doesn't pay, who will bear the bad debt risk? Wait. If the customer doesn't pay, and if it is a recourse factoring, if it is a recourse, factor has a recourse to the company. Company will bear the bad debt risk. Recourse, factor has a recourse to the company. Factor can go to the company. Okay. So that is called recourse factoring. Okay, see, if you read it, it will be clear. Under recourse factoring, factor purchases the receivable on the condition that any loss arising out of irrevocable, you make it irrecoverable. This word change. Any loss arising out of irrecoverable, right? Arey, move. What is the spelling of irrecoverable? Irrevocable word may not be very appropriate. First you write IR and then recoverable. It becomes irrecoverable. Okay. Any loss arising out of irrecoverable receivable will be borne by the client. That is called recourse. Factor has a recourse to the client. An opposite of this is called non-recourse factoring. Non-recourse means full factoring. It means factor has no recourse to the company. Factor has no recourse. What if there is a bad debt? Who is going to bear the bad debt risk? The factor. So for a summary you will write, in recourse factoring, bad debt risk is borne by company, the client. In case of non-recourse factoring, the bad debt risk is borne by the factor. Where do you think he will charge higher commission? Non-recourse factoring, he will charge you higher commission. Is it right? Say yes. Yes. Now next is comparison between maturity factoring and advance factoring. One more question for you. What is the difference between maturity factoring and advance factoring? Maturity factoring, the factor does not give you advance. He will collect the amount from the customer and then make payment to the company. Okay. But in an advanced factoring, the diagram which is drawn in your book in the previous page is advanced factoring. In an advanced factoring, the factor gives advance against invoice, which can be around 80% of the invoice value. Next point, notified factoring versus non-notified factoring. The diagram which is drawn in your book on the previous page, you can see, is notified factoring. In a notified factoring, the customer is informed about the existence of a factoring arrangement. I had drawn one invoice, if you remember, and I had written there one line, please make payment of this invoice to SBI Factoring Services, which means customer is made aware about the existence of a factoring arrangement. It is also called disclosed factoring. It's also called, why? Because the existence of factor is disclosed to the customer. Sometimes we don't disclose to the customer about a factoring arrangement. Then it is called undisclosed factoring, okay, or non-notified factoring. And then, as I said, now because we have got customers all over the world, we are, suppose, businessman. A company thinks we don't have so much of expertise in dealing with foreign customers. Dealing in India and dealing outside India are two different ball games altogether. In India, we have to just follow Indian rules and regulations. Formalities are less. Is it right? Just hire some transporter, load the goods, he will deliver it to the customer in India anywhere. And he will make you payment also easily. That's it. But if you have to deal outside India, then you have to follow the Indian Customs Act. You have to follow their country's law also. Is it right? And then he is in a different country. Indian laws are not applicable to him. What if he doesn't pay? Can you go to court of law in India and say, Mr. Donald is not paying, kindly help us to recover? Indian law cannot extend to Donald. Is it right? He's not an Indian citizen. He's not in India. If he comes to India, then you catch hold of him, but he will not come only. Then you go to International Court of Justice, okay? But for that, you need so much of money. Your bill is of 20,000 rupees. To hire a lawyer in International Court of Justice will cost you 2 crore rupees, okay? Who can argue your case in International Court of Justice. So you'll not do that exercise. So your money will be lost. So here comes the role of international factor. Because they have international experience. They have got a counterpart in other countries also. They've got a counterpart in other countries also. So all of them will combine together now and they will help you to recover the money. Plus, this international factor also helps you to meet all the import-export related formalities also. Lot of formalities are there when you have to export the goods. You have to follow Indian Customs Act. You have to pay duty if applicable. There are special packaging required, special containers required. Lot of quality checks are done. Do you know that? Otherwise, your container will not be shipped there. And you have to pay all, complete all the documents, challans. Then the ship will move carrying your goods. Who does all this formality? The factor. Is it right? So here the factor also helps you to meet in second line on the screen legal and procedural formalities pertaining to export. Without the help of an expert in exports, as a normal businessman, you will find it very difficult to export the goods. So much of formalities are involved. Documentation, custom formality, duty formality, okay, plus other countries formality you have to perform. And different countries have different rules. Do you know that? Different countries have different rules. Some countries don't allow import from India only. Some countries don't allow import from, say, China. Then certain goods are not allowed to be imported. Like Indian articles which are manufactured by child labor are not allowed to be imported in many other countries. Okay, so you have to take a certificate that this good is manufactured without using child labor. If a country is virus prone, then again lot of quality checks have to be done before the goods can be exported. So that formalities are performed by factor. Okay. What is the other name for international factoring? Remember, export border, export cross border factoring. Underline, export cross border factoring. If they ask you write a note on export cross border factoring, then you will say, sir, you have not taught this to us. Please refund our proportionate fees, 20 rupees. So, proportionate. I will say, no, it is already there in the book. Who are the parties involved in international factoring? Now, 4 parties are involved. On Indian side, the Indian exporter, his export factor. On the counterparty side, the customer who is importer and his factor. And his factor. So, factor will work together and they will ensure that the payments are collected on time. So, therefore, factoring plays a very important role in business if you use them properly. Of course, they involve some cost, but your time is released. You can be free for core activities. Now, should we go for factoring or other form of financing? Should we go for factoring or other forms of financing? The answer is simple, whichever is cheaper. Because factor gives you advance. He also helps in collection, monitoring of receivable. So take into account all the cost and benefit associated with factoring arrangement. Not just the cost. There are benefits also, like reduction in bad debt, reduction in administration cost, reduction in collection cost. So that will give me the cost of factoring. Compared with a bank loan, bank usually don't provide any other service, but bank only gives you the loan at a lower rate of interest. After considering bank loan, bill discounting and the cost of factor, the one which is cheaper, the one which is will be selected. Okay. But when you are evaluating a factor, you have to also take into account some benefits that flow when you appoint a factor. Factor will charge you interest. Factor will charge you commission. But factor also helps you to reduce bad debt risk. Do you know that? So while computing the cost of appointing a factor, take into consideration any savings that you will have. Okay. Now, one question which they ask in the exam quite often, that is why I have put it here. Difference between forfaiting versus export factoring. But then the problem is you have never heard about this term called forfaiting. Forfai. Forfaiting. It is not forfeiting. Forfeiture of share is different. Okay. So first in your notebook write a small 2-line note. What is forfeiting? Forfeiting. This itself is a question in the exam. What is forfeiting? And then the student will write, if the shareholder does not pay his call money, his shares are forfeited. Company has a right to reissue forfeited share. Forfeited share appear in balance sheet under the head share capital. On reissue of forfeited share, any profit is transferred to capital reserve. Your answer is right if the question was forfeiture of share. But it has nothing to do with that. Not even 0.01%. Your answer was right. So write down discounting of discounting of foreign bills, discounting of foreign bills, discounting of foreign bills by a bank, discounting of foreign bills by a bank called forfaiter, called forfaiter, Forfaiter, forfaiter. Okay. The banks takes the responsibility of collecting the amount. The banks takes the responsibility of collecting the amount from the foreign customer, from the foreign customers. Okay. So these two lines plus these four lines on the screen, you combine your answer for forfeiting. So I'll first explain what was written there. You are an Indian party, your customer is in America. So what you do first, you draw a bill on him, he will accept that bill, and then you get the bill discounted with a bank in India. That bill discounting by a bank in India, but for a customer in outside country, is called forfeiting. It is like bill discounting, but the customer is in a different country. So here also you get the advance. Export factor also gives you advance. That is why they have asked you to compare the two. There must be some reason for comparison, yes or no? So what is the point of comparison? In both cases, a company in India has a customer outside India, and in both cases, both parties are giving you some form of advance, some form of funds. So that is the reason we are comparing the two. You can't compare Virat Kohli with Mount Everest. There is no point of comparison only. Can you? Virat Kohli can be compared with that Rahul, not Gandhi, that other Rahul, KL Rahul. Okay, there is some point of comparison. So let us begin this wonderful discussion on the difference between forfeiting and export factor. Have you ticked mark that this question has been asked in the past? First is, a forfeiter discounts the entire value of the bill. If the bill is of $100, he will deduct some 2-3% depending upon the maturity period of the bill and pay you the remaining amount immediately. But what the factor does, the export factor will not give you 100% of the bill. He will only give you advance, which will be around 75 to 80% of the bill. Right. Second, the forfeiter's decision to provide financing. When will a bank discount your foreign bill? It will depend on the financing standing of the availing bank. It will depend on who is the banker of that foreign customer. Who is the banker of the foreign customer? Because usually in forfeiting, the banker of the foreign customer gives a bank guarantee, which I have not dictated actually, but a foreign customer's bank gives the bank guarantee. So if that bank is a good bank, an internationally renowned bank, then the bank in India will do the discounting. Because if that foreign customer doesn't pay, then there is a guarantee given by an internationally reputed bank, and therefore we can recover the money. So whether to discount the bill or not depends on who is the banker of the foreign customer. Okay. But what about the export factor? Export factor will use his own analysis. He will use his, because he is an expert in that field. He knows which customer is good, which customer is bad. Based on his own analysis, he will decide whether to give advance or not. Point number 3, forfeiting is a pure financial agreement. Pure financial agreement means the bank will only give you the advance, nothing else. Bank is not going to do monitoring of receivable, collection of receivable, but an export factor not only gives you advance, That is one aspect. He also helps you with other aspects also, like ledger administration, collection, monitoring. Then another interesting difference is forfeiting is a short-term financial deal. Short-term means suppose the bill is going to get due in 3 months. So it is like an advance for 3 months. Factoring arrangement can be a long-term arrangement. You and the factor can enter into a 5-year agreement, and then for 5 years the factor will continue to provide you the services. One more question for you. Difference between bill discounting and factoring. Bill discounting, all of you have studied. There also the company gets advance by getting its bill discounted. In factor also the factor provides you advance against your invoices. So there is something to compare. In both cases we are able to recover money from our customer faster. Correct? Point number one. Parties involved. In bill discounting, 3 parties are involved. Drawer, drawee, payee. But in factoring, their parties are not called drawer, drawee. The parties are called debtor, client, and the person who provides finance is called factor, not the bank. Here the party is usually the bank, the pay is usually the bank. In nature, it is a method of borrowing from commercial bank. It's a type of borrowing from commercial bank, whereas it is a method of management of receivables. So here our main objective is receivable management, pattern of financing, same point. Entire bill will be discounted. So what banks do, take 100 rupees minus discount charges, remaining amount is credited to your account. But what factor does, he will not give you 100 rupees advance. He will take 90 or 80 only as a base and then give you the advance. 10 to 20% margin he keeps, so that in future if there is a bad date, sales return, discount, it will be taken care of. Next is additional service. Banks do not provide any additional service. It is just a financing arrangement. But factor not only gives you advance, he also provides a range of services. Example, sales ledger maintenance, advisory service, collection, monitoring, okay, follow up, credit investigation. Next point is who bears the bad debt risk in a bill discounting. Apply your 11-12 CPT foundation knowledge. Who bears the bad debt risk in case of bill discounting? Ultimately the drawer. Because if the drawer doesn't pay, the bank will come to the drawer and recover money. So risk of bad debt is with the entity only. But in case of factoring, it depends on whether it is recourse or non-recourse factoring. If it is a non-recourse factoring, bad debt risk is borne by the factor. Next is there any statute governing bill discounting? Yes. NI Act, Negotiable Instrument Act is applicable. Do we have any specific act for factoring? Then you have to follow Contract Act. If there is no specific act, which act we follow? The Indian Contract Act, because that deals with all forms of contracts. Do we have any grace time? Yes, in bill discounting we have a grace time. Grace time means even though it has become due, 3 more days are allowed to you to make the payment, arrange for the funds. But in factoring there is no grace time. If the bill has become due on 31st March, pay on 31st March. What is the income to the financer? That is the bank. In case of bill discounting, the bank only income is the discount charges. But the factor has 2 income. He not only earns interest on advance, but he also earns commission for providing services. Okay. So this was a long discussion on factoring. Complete discussion on factoring. Everything we have covered. Now there are two questions pending which actually deal with factoring. Okay. One small question, only half page for 10 marks. Question number 10. Have you reached question number 10? Let us begin. This question number 10 is Foundation Limited is manufacturer of various electronic gadgets. Manufacturer of various electronic gadgets. Okay, mobile, laptop, etc. The annual turnover for the year 2014 was rupees 730 lakhs. Got it? So what is the turnover in 1 year? 730 lakh. Company has a wide network of sales outlet all over the country. So it has sales outlet means branches. It has branches all over the country. It makes sales through its branches. Okay, branch model. The turnover is spread evenly for each of the 50 weeks of the working year. So how many weeks do they work in a year? Just 50. And you people 52. Okay, you have no time to relax. So sad. So per week sale is how much? It is spread evenly. Evenly means equally. Quickly 14.6 lakh. All sales are for credit. All sales are for credit. And sales within the week are also spread evenly over each of the 5 working days. Oh, they work only 5 days in a week. You work 7 days in a week. So sad for you. Yes or no? No. Happy. This lady is saying that I am happy to work 7 days a week. That's good. Sales is spread evenly over the week means every day the sale is equal. So this also divided by 5. So per day sale is how much? 2 point? So we can directly say every day this company sells 2.92 lakh rupees. Okay. All invoicing of credit sales is carried out at the head office in Mumbai. Who does the invoicing work? Head office in Mumbai. Sales documentation is sent by post daily from each location to the head office for the past 2 years. Now see the business model of this company. This is head office, Mumbai. And these are their branches all over India. Is it right? So they sell to the customer. Their duty is only to dispatch goods to the customer. After that, they will send sales document. Sales? What is sales document? Not invoice, dear. Sales document means your dispatch details or what we call delivery challan. Okay. So there they will mention to this customer we have dispatched these goods. Branches are not allowed to prepare invoices. Maybe because they don't want to dilute the secrecy. Okay. And plus branches may not be competent also to draw the invoices. Then head office after receiving delivery challan, it will prepare invoice. It will prepare invoice because head office knows with which customer what are the terms and condition. Am I right? Not necessarily with every customer you have same terms. So HO does not want to disclose that to the branches. Then they have to prepare GST calculation, etc. So therefore that task is done by HO. So what is the problem with this model? Delay in preparing and dispatching the invoices were noticed. First he will send you delivery challan, then he will send you invoice. So there is a time lag between dispatch and preparation of invoice. As a result, some of the invoices were dispatched in the same week and the remainder the following week. Of course, this model will result into delay. So sometimes you are not able to dispatch the invoice in the same week. Goods are sold in this week, invoice is dispatched in the next week. So now they have done an analysis of delay in invoicing, being the interval between the date of sale and the date of dispatch. After analyzing, they have found in 20% of the weekly sale cases, dispatch of invoice is delayed by 3 days. In 10% cases, 4 days. In 40% cases, 5 days. And in 30% cases, 6 days. What will be the impact of this delay? Read further. A further analysis indicated that debtors take on an average 36 days of credit before paying. So customers take average collection period of 30 days, and this period is measured from the date of dispatch of invoice rather than, if it is from the date of sale, it will not make any difference. If I sell on 1st of January and the customer has to pay in 36 days, then he will pay on 36th day. But then if I dispatch the invoice on 5th of the month, he will add 36 from here. He will add 36 from the date of dispatch of invoice. In that case, my money is blocked for 5 extra days. My money is blocked for, had I dispatched the invoice on 1st of January only, he would have paid on 6th of February. Yes or no? But if I dispatch him on 5th of January, he'll pay me somewhere around 10th of February. So my money is blocked for 4 or 5 days. There is an opportunity cost. Okay. So in 20% cases, we have opportunity cost of 3 days. In 10% cases, we have opportunity cost of 4 days, then 5 days, then 6 days. So first what you will do, you will find what is my existing opportunity cost using this table. Okay. Then the next task is, it is proposed to hire the agency for undertaking the invoicing work at various locations. So now after 2 years of research, you found there is a lot of delay. Let us appoint an agency for invoicing work at various locations. Now the business model will be, branches will not send the invoice to the head office. Branches will inform to the agency, and the agency will do the invoicing work. Agency is assured that the maximum delay would be reduced to 3 days. Maximum delay will be reduced to. So now if you hire the agency, see the improvement. 40% of the sale, no delay. 40% of the sale, only 1 day delay. And 20% cases, 3 days delay. Okay. So again calculate the opportunity cost here. Your opportunity cost will be substantially reduced. Is it right? One more thing. How many days you are taking to collect the money from the customer? 36 days. This agency says, if you allow us to monitor the collection, we will reduce the credit period to 30 days. So 6 days will be reduction in the collection period. If there is a reduction in the collection period, there is a reduction in opportunity cost. Earlier we were taking 36 days to recover money. Now we'll take 30 days to recover money. One more benefit. Who will do all this work? The agency. Since agency is going to do all this work, ES Foundation expects to save 4,000 per month in postage cost. This is side advantage. Now I don't have to send mail from branch to HO to customer. All this work will be done by agency. So how much postage cost we are saving? 4,000 rupees per month into 12 months equal to 48,000 rupees. And what is your current opportunity cost? All working funds are borrowed from a local bank at a simple interest of 20% per annum. That's a very high rate of interest you are incurring. So then what is the question after this long story? The agency has quoted a fees of 2 lakh rupees per annum for only invoicing work. In that case, your delay in invoicing will be reduced. And 2,50,000 per annum for monitoring collection. In that case, your average collection period will reduce from 36 days to 30 days. And is willing to offer a discount of 50,000 provided both the works are given. But if you appoint the agency for both work, which both work? Invoicing work, monitoring the receivable work, then they will give you a discount of rupees 50,000. So what will be the total fees of the agency in this case? 4 lakh. Only invoicing work 2 lakh. Only monitoring work 2.5 lakh. Both work 4 lakh. You are required to advise. You will advise AS Foundation about the acceptance of the agency's proposal. Should AS Foundation accept the agency's proposal? Yes or no? Option 1, only invoicing work should be appointed. Option 2, only monitoring of receivable. Option 3, both. Option D, none. So which is the right answer? Which is the right answer? For that we have to solve. Benefit cost analysis. Benefit is your opportunity cost will reduce. Postage cost will reduce. And the cost is the fees that you have to pay to the agency. Is it right? So we'll do analysis one by one. Dear student, kindly write point number 1, weekly sale. Weekly, or you want to try yourself? Even after you try, ultimately I will have to try only. Yes or no? And that will result into lag. We want to reduce the lag. In a question of reduction of lag, you are going to create lag. So first write down weekly sale. 730 divide by 50 is rupees 14.6 lakhs per week. 14.6 lakh per week. Now write down point number 2. Point number 2. What is point number 2? Heading write down of a table. Table will come below that. Calculation of opportunity cost. Calculation of opportunity cost at present. Calculation of opportunity cost at present due to delay in invoicing. Due to delay in invoicing. Due to delay in invoicing. Spelling of invoicing is little wrong here. Invoicing. Now you draw this 4-column table. First column write number of days of delay. Number of days of delay. Second column write percentage of weekly sales. Percentage of weekly sales. Third column write sales amount, and fourth column write interest at the rate of 20%. Interest at the rate of 20%. Go to the first table. Already discussed with you. Okay. That at present the company is delaying 20% of the weekly sale by 3 days. Do you agree? In terms of rupees, it is 14.6 lakh into 20%. So you are delaying rupees 2,92,000 by 3 days. Every rupee has an opportunity cost. Had you deposited 2,92,000 3 days before, you would have saved interest for 3 days. You would have saved interest for 3 days. You would have saved interest for 3 days. Dear student, apply simple interest formula. 2,92,000 on your calculator into 20% into 3 by 365 into 3 by 365. Is it 480? Wonderful. Now 4 days, 10%, 4 days 10%, multiply 10% of 14.6 lakh, 1,46,000. On 1,46,000 at 20%, at 20% for 4 days. Is it 320? Good student will not wait for me for the next 2 line, but my hardcore fans will wait for me. Till I write, they will not write. Welcome to fans club. 5, 40%, 5,84,000, 1600. Then you try the next one, 6 days. Yes, come on, move fast. Haji, 30%, 4,38,000. What about the interest? 1440. Therefore, total interest lost in a week. 3840 in a week. Wait, stop. How many days this company operate in a week? 50 weeks. In some previous batch, wait a minute. In some previous batch, students asked such interesting question. They are asking me, I don't know from where those kind of imagination originate. They are saying in 50 weeks multiplied by 7, there are 350 days only. Why you are dividing by 365 here in calculation of interest? Is this question right, first of all? Is this question right? Whether you work 50 weeks or 20 weeks in a year, interest calculation is done by the bank. Bank will use their own calculation. Suppose you work only 2 days a week, 2 weeks in a year. So will I calculate interest for only 2 weeks? No. Interest meter will be as usual. Is it right? So this question that we should take 350 in the denominator is a wrong question. Your query. Number of days. What is number of days? 365 days in a year. That is what we have done. Now write down below that line, write down annual opportunity cost. Annual opportunity cost. Annual opportunity cost. 3840 into 50 weeks. 1,92,000. Now you see the problem with delay. A small amount in a year becomes a big amount. So in 1 year, they lost 1,92,000 rupees. Now here you multiply by 50 weeks because it operates only 50 weeks. Same calculation we will do again when the factor is appointed. Yes or no? Dear student, write down point number 3. Point number 3 write. Point number 3 write calculation of weekly opportunity cost if the factor is appointed. This time you will try. Let our intelligent students try. Format is same. Number of days delay. Percentage of weekly sale. Sales amount. Sales amount. Interest at the rate of 20%. Is it right? Keep the second table in front of you. Start solving. At least you should also try sometimes. Final answer. Final answer. Come on. Yes, give me the final answer. Is it 800? Check it. Some of you are working hard. Some of you are hardly working. So 800 is the right answer. Right below, annual opportunity cost. Annual opportunity cost will be 800 rupees per week into 50 weeks. Haji, come on. So you see how much is the saving. Earlier we were incurring 1,92,000 when we were monitoring, when we were invoicing ourselves. Just change the business model slightly and you save a huge amount of money. How much you saved? 1,52,000. So what I'll do, now I will write point 4. Net benefit if the factor is appointed for invoicing work only. Net benefits if the factor is appointed for invoicing work only. Only invoicing work. Let us check how much do we save on net basis. First, write down serial number, particulars, rupees. First, write down point number is savings. Savings. What will be saving? Saving number 1, write down opportunity cost or interest cost. When we were doing invoicing, we were losing 1,92,000 rupees interest in a year due to delay. But when the factor is appointed, we will lose only 40,000 rupees. Still we saved 1,52,000. And second savings, write down postage cost 48,000. How did you reach that 48,000? 4,000 per month PM into 12M. months. Now, then there is a small query which you will get. Why postage is related to invoicing and not to monitoring of receivable? Yes or no? Where do you think postage requirement is more? In invoicing work, because the branches will send the delivery challan to head office. Then head office will prepare invoice and again send it to the branches. So that will require more postage expense, or having a phone call to the customer and monitoring the receivable will require more postage expense. Invoicing will require postage. Question has an error. One can challenge the question that how can entire postage be attributable to invoicing? So assume, is it right that postage cost is related to invoicing work and not to monitoring of receivable? So write down 4,000 into 12, it comes to 48,000. Total in the outer column is 2 lakh. Point number B, cost. As I said, it's a benefit cost analysis problem. So my benefit will be 2 lakh. They can only ask you this much question in the exam, only invoicing work, no other part. Then your answer will be fees payable for only invoicing work is 2 lakh. Whatever you saved, you paid as fees. You are not benefited. He is benefited. So your net benefit is nil. Wait, we have two more options. We have which two more options? Only monitoring and invoicing plus monitoring. So let us check for those options also. So now is point number 5. Hello, point number 5, write down net benefit if the factor is appointed for monitoring collections only. Net benefit if the factor is appointed for monitoring collections only. Is appointed for monitoring collections only. Now only focus on collection part. Earlier we were taking 36 days. Earlier we were taking. Now the factor will collect in 30 days. Assuming nothing else changes, same task, only monitoring. Only monitoring. So we were taking 36 days. He will take 30 days. 6 days reduction in your collection period. So there is a reduction in opportunity cost, but he will charge 2,50,000 for this service only. So my question is, what is net benefit? Yes, try at least sometimes, once in life, try something on your own. You people are only copying throughout the day. I'm just asking a simple question. Net benefit, huh? Question is, those who have not listened to me, what is the net benefit? Net benefit means saving minus cost. Cost is fees payable 2,50,000. Only you have to just find one figure saving. Calculate opportunity cost of 36 days. Calculate opportunity cost of 30 days. Over. Hello. Huh. What is the net benefit? Only give me the answer of net benefit. If it is right, I will understand you have done it right. Seems that you are not interested in answering. Anybody wants to answer? Hello? Huh? It should have been done by now. Chalo, I will help you. Right hand side, write down rupees. Point A. Reduction in collection period. 6 days. So earlier we were taking 36 days. Now I will take 30 days. So you have reduced by 6 days. Now since last 3 to 4 days we are doing this calculation only. Okay. So I will write reduction in investment in receivable. Reduction in investment in receivable. If you want to do separate calculation, then first you have to find investment in receivable based on 36 days. Then you have to compute investment in receivable based on 30 days and then take the difference. The answer will be same. So how do you compute investment in receivable? Which formula? Credit period. Next, come on. Upon 365. Into we have three options: total cost, which is not there; variable cost, which is not there; sales is there. Is it right? So the answer will be 6 divided by 365. 6 divided by 365 into annual sales. So today we have used that third formula. Is it right? Do you remember the hint? First priority to total cost. Second priority to variable cost. Third priority to sales. Third priority to, and this formula we must have used in your batch at least 40-50 times. Okay. But somebody who does not want to listen only, it's so difficult to explain. Reduction in opportunity cost. Reduction in opportunity cost. At least you could have done 36 days, 30 days difference. What is the opportunity cost? 20%? 2,40,000, right? 20%. Right? Calculation afterwards you'll forget. Why don't you try? Just tell me, give me the honest answer. Why are you not trying and get this answer? You got the same answer? Wrong. See, if you can't solve such basic questions which you've already learnt in last 3 months, I really have a doubt about your ability to get through this exam. Today I am very disappointed. Okay, all my efforts of 3 months looks like a complete waste. 36 days you could have calculated. 30 days you could have calculated. Difference you could have calculated. What is happening to this generation? Fees payable, 2,50,000. That is given. Right, given. And then net benefit. Oh, this time net benefit is negative. C minus D minus 10,000. Here it is not at all viable also. Is it right? So what is the next choice left with us? Both work. So write down last step number 6. Point number 6 write down. Point number 6. Net benefit if the factor is appointed for both work. Net benefit if the factor is appointed for both work. Now keep your working note 4 and 5 in front of you. 4 and 5. So that you can merge the two answers. Okay. Right hand side 2 column rupees. Point number A, saving. What was your saving in invoicing work? Working note 4. Point number A, outer column figure. 2 lakh. Very good. And what was your saving in monitoring work? Working note 5. Working note 5, only saving 2 lakh 40,000. Can you see that in your answer? So my total saving would be outer column 4 lakh 40,000. Just we have merged the two answers. Saving, total saving. Now B, fees payable to the agency. This time we will not merge the two answers because we will get a 50,000 discount. 2 lakh only invoicing. 2 lakh 50,000 only monitoring minus 50 discount. If you give both the work, volume discount, everywhere discount works, okay? And therefore now if I calculate the net benefit, it comes to 40,000 positive. So your decision is A, B, C, D. Which is the right answer? Option A, only invoicing? No. Only monitoring? No. Option C I had given was both. Both is right. So write down the agency should be appointed for both work. Note or decision. The agency should be appointed for both the work because the net benefit is rupees 40,000. Net benefit is rupees 40,000. This answer is over. Waiting for any query. Haji, query? No query. You can accept A also, but which is going to give you more benefit? C. So more is better. Is it right? If C was not there, A, your answer will be indifferent. The first answer is indifferent. You may or you may not, because the net benefit is 0. Net benefit is 0. So in case if you want to reduce your headache, you will say accept. If you don't want to dilute your confidentiality, you will say don't accept because we are not getting any benefit. Giving your invoice to an outside agency for all your branches means there is a huge compromise on confidentiality of the business. And without any benefit, we will not do that. Is it right? So therefore, both answers are possible there. But in case like this option, since we have a higher benefit, we'll go with option C. Now we'll take a break.